Welcome to Unleash Your Inner Goldilocks, how to get it just right. Thank you so much for joining us from all over the world, directly on this live show, as well as on our Facebook Live. And we are so excited to bring you another hour of engaging conversation and insightful knowledge and information. Just like every week, you're going to have so much food for thought and so much opportunity to take this information and shape your life and the lives of the loved ones. Let's take a moment and think about why this is the Goldilocks community and why we are in the process of unleashing our inner Goldilocks. What does Goldilocks remind you of? To me, Goldilocks reminds me of that child that we all were one time, where we were able to understand what we needed, understood how we influence people to get that accomplished. Even before we learned to speak a language as a baby, we knew how to get the adults to do the things that we needed to do for ourselves, right? Somewhere along the way, the ability to influence others and get things accomplished gets lost because we start becoming somebody to fit into certain boxes, dictated by our environment, dictated by our family, dictated by our job. But Goldilocks is a good reminder to take a step back and think about, what am I doing? How am I doing it? And why do I need to find my centeredness and come from that place of awareness and knowledge so that I can be empowered and I can be successful? Research shows that we can all influence only 3 levels from where we are, just 3 levels, okay? So imagine if I'm talking about an issue of any particular proportion. Today, since the topic is going to be insurance, let's pick the topic of insurance as a conversation point. What if I'm a believer that life insurance, really doesn't matter because it is for somebody else when I'm dead? I take that extreme position on one end. And what do I do with that? There is no more place for me to go. And so I don't get life insurance. I don't do the things I need to do. And then the consequences are for the loved ones I'm leaving behind. But I also can't influence anybody else. Maybe I can talk a few more people into not buying insurance, right? Not investing in insurance. Think of it as investing in insurance as opposed to buying insurance. So when I'm at the extreme right end of an issue, I can only influence 3 levels towards the center. Now, if I'm at the extreme left end of an issue and I am fully bought into the value of life insurance, but I don't look for the nuances and the different types of insurance, and I just go into it without understanding all the nuances, then I am also not going to serve myself, and I can only influence 3 layers from the extreme left I am in. But imagine if I take the time and understand all the issues, pros and cons, and the different types of instruments and everything that is available around the topic of, say, life insurance. Now I'm able to have conversations and influence people right in that centered lane. I can also influence 3 levels to my right and 3 levels to my left. All of a sudden, I have 6 levels of influence. So if I am in the business of helping people invest in insurance and helping people build a financial future that is stable and prosperous, it behooves me to come from that centeredness. Same way, if I'm a consumer of that information, it behooves me to come from that centeredness. Any issue that we are passionate about, any issue that is driving my purpose, when I come from that centeredness, I can have the maximum influence, and therefore I'm going to be successful. But because I'm also coming from that centeredness, I can influence other people and drive that shared prosperity. And when everybody is prosperous, my business, my purpose becomes that much more successful. Think of even the basic concept of purpose. What is purpose? Purpose is an intersection. It is at the intersection of what you love, what you're great at, and what the world needs. Even finding your purpose requires you to go to that centeredness If you do what you just love to do, but you're not good at it, somebody else is going to do it better and somebody else is going to be economically successful. If you're great at something, but you don't love it, you're not going to be able to serve with passion and heart. And that will show to your clients and your customers, and they're going to go towards somebody else who may be not as great as you, but who cares about them and loves what they do. Now, if you have something you love and you're great at, but it's not what the world needs, yeah, you will continue to do it for the rest of your life, but you're not going to be able to make money out of it because the world is not seeing value in it, and therefore the world is not going to pay for it. So in order to have a purposeful life that drives your economic engine and makes you financially free and have a sustainable life, you need to find that centeredness where your purpose sits in the sweet spot of what you love, what you're great at, and what the world needs. So if your purpose itself sits in that sweet spot, and we are talking about insurance and how to build a safe and secure financial future for you and your loved ones today, there are 3 nuggets of information or wisdom I want you to take into today's episode. One is it's our responsibility to make sure our family is ready for the seasons of life. So ask the question, is your family, is my family ready for the seasons of life? Seasons of life teach us to evolve and transform to shape our resilience. Embrace each season with hope. How am I setting up my family's options so that we can navigate all seasons, right? And seasons here is euphemism for different things that are going to happen in life and the need for me to have that ebb and flow. How many of us don't want to have a life that is peaceful and happy? Think about that for a moment. We all strive, regardless of how we go about it, we all strive to be happy and in a place of peace. So invest in peace of mind for a life of balance. And investing in peace of mind allows you to find that balance. And from that balance comes your ability to find that inner peace. And start thinking of insurance and some of the other financial tools as tools that give you peace of mind and allows you to find that balance. Don't think of it as expenses. Do you think of your child's education as expense? You think of it as investment. Why not think of other things that assures your life as investment? Because it has a long-term return. Expense is something that you spend today and it doesn't have a future return. You go out there and buy an ice cream, you eat it, you digest it, you move on, that's an expense. Your car is an investment because you're going to use it for at least 5 years, if not more. Your home is an investment because it has a longer-term return. Think of other financial instruments that are going to be long-term investment and look at that as a tool for your peace of mind. Strategically approach your family viability. Your family viability doesn't happen by chance. It has to be intentional. It has to be by design. And how do you do that? Create your playbook, shape your path, and then go out there and live your destiny. And in that process, you are also shaping the destiny of your loved ones, your spouse, your children, your grandchildren for that matter. So think of what we're going to talk today as investment, as shaping your destiny, as strategically approaching your family's viability, and investing not just in your family's financial success, but also in your happiness and peace of mind. And to have this very, very important, exciting conversation and kind of interject some love and sexy into this is my friend and our life insurance specialist, Ben. Ben, welcome to the episode.
Welcome, Dr. Cass. Thank you. Appreciate the chance to be a guest on your show and teach people basic about life insurance and also some of the sexy uses of life insurance.
Absolutely.
Morning, everyone.
Thank you, Ben. One of the things I love about talking to you and having this conversation for the benefit of the audience is the fact that you love what you do and you see the value of how love can be transferred and demonstrated through this medium and make sure that the family is protected. And you're not afraid to talk about something as serious as life insurance and life preservation and building the family's future in a very fun kind of way, right? Sexy is about keeping it fun, keeping it lighthearted, keeping it playful. And so
Okay.
just to give you the audience a little bit about Ben. Ben is originally from the Philippines. He crossed the mighty ocean, came on to the United States, served our military. He's an Army veteran. So he first served our country and learned and understood and assimilated into the society. And now he is committed to serving our society in a different way. And it is my honor and pleasure to have him here. And Ben, why don't you take a moment and tell us, oh, and you are also an outdoor enthusiast, right? You and your wife love to do outdoor activities. One of the things I love about following both of you is I get to go places and enjoy the things that you are experiencing. But you're also able to do this because you know that you have taken care of life, right? So
Definitely.
going to fall into place. And how can we help other people embrace life with all the love and enthusiasm and go out there and have fun?
Yes,
So
yes.
what got you started in this? Let's start there. What got you started in this?
So when it comes to life insurance, I got exposed to it when I was in my late 20s. So I was looking for an opportunity. At that time, I just passed my real estate license. So I was
Mhm.
thinking of going into real estate. Um, but the first few times that I had to like show people around, driving them around, and then after showing 10 houses and they still haven't made a decision, I kind of like, maybe this is not for me. So I was on a break, I was on a restaurant, and this gentleman, he started having conversation with me, and he looked very, very successful, and uh, very professional, and he looks like he's enjoying life.
Mhm.
So eventually, cut the story short, he sells life insurance, and I ended up becoming one of his agent. And from that point on, that's how I realized what life insurance is, what it can do for people, and at that point too, I wanted to buy life insurance because, if I'm gonna sell it to people, I'm gonna tell people to get one, I should have one. Doesn't that make sense?
Absolutely.
So, but what happened is, I had a kidney condition, and I was declined, and I was surprised because my health is good. I'm in good shape. I'm not taking any kind of medication, and then when it comes to my test, my numbers are great. But still, because it's something to do with the kidney, I got declined. So at that point, I felt that feeling of not being at peace, because now I'm my late 20s, right? At that point, I believe I had two kids at that point,
Mhm.
and I didn't feel like, okay, without the life insurance, if something happens to me, how can my family survive financially,
Mhm.
right? So eventually, I was able to get covered, but now I know how people feel when they get declined, because to me, it didn't give me that peace of mind until I had a life insurance, and then no matter what happens to me, if uh something happens to me the next day, my income will be replaced. So those are the
Mhm.
early experience I had with insurance. um so far,
Okay,
and then, okay, go ahead.
that's interesting. So you got into it by chance, but it was your calling, right? It was meant to be. And a lot of young people don't think of insurance. You were unusual. A lot of people think life insurance is for old people, but the value of insurance is getting it when you're young And parents can actually get life insurance in the United States for their babies, right? You
Correct.
can get for your children, and that becomes an investment for the child. And you're also getting the life insurance before any pre-existing conditions can show up. Therefore, you're giving your child a investment instrument. Talk about that a little in terms of what is the best time to start and the importance of starting early.
There's the best time is now, because you can actually open up a policy for somebody as early as uh 14 days old. Okay,
Mhm,
why? You know, let's say maybe for college planning,
mhm,
right? So the sooner you start, the cheaper the insurance costs. And then when it comes to accumulating cash value, the longer years you have, the more opportunity you have for compounding and cash accumulation. But
mhm.
let me step back a little bit because you did mention, I'm the Mr. Love Insurance, right?
Absolutely,
So
yes.
uh the reason I wanted to do that because, as you know, for most people, talking about life insurance could be boring, right?
Mhm.
And then also could be uncomfortable because you're talking about, passing away. At least the old type of life insurance is about that, right? What
Mhm.
happens if the person dies, right? The crazy thing is everybody wants to go to heaven, but nobody
They don't
wants
want
to
to die.
die, right? So,
That is
and
true.
that's one of the guaranteed, and one thing that's guaranteed in life is that you're gonna pass away, right? That and
Yeah.
taxes.
Yes.
That and taxes, right? So yeah, to me, I call it love insurance because you buy love. The type of life insurance that I focus on is you buy the life insurance out of love for yourself, right? So, for example, if you're single, you just graduated from college, you have a job, you have um, school loans, right? So
Mhm.
now something happens to you, you don't want to burden anybody with that debt, and you don't want to burden anybody with the cost of 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 burial or whatever you need to,
Mhm.
right? And then also you buy life insurance for love of your family, right? For example, if I'm 25 years old, I have two kids, I'm the main breadwinner. If something happens to me, God forbid something happens to me, can my family survive financially?
Mhm.
Right? So you got to think about those things. And so that's why I call it love insurance, because you really want to buy it because you love yourself and you love the people around you. You want to protect them,
Absolutely. Mhm.
right?
And today we have instruments where it can also be a living benefit.
Correct.
My life insurance, the way we have structured it for my family, is if I got cancer or any kind of long-term illness, the life insurance will pay out for my long-term care. And I bought a option where it's portable outside of the United States because my husband and I have a Caribbean retirement home in Belize. And so we wanted to make sure that it is portable in Belize and we can have home health care in Belize,
Correct.
right? So those options are available. Life insurance is no longer just a benefit after death, at least in the United States. So different countries, different regulations, you need to check what is applicable to you. But for us as US based folks, we have, I think, far more options than most. So why don't you talk a little bit about that expansion of that love insurance where we ourselves can get benefit?
Correct. So, and that's one of the reason in the older days is life insurance is just about dying, right? But
Mhm.
not nowadays. For at least about 10 to 15 years, there's been options on life insurance that it's it's the real life insurance, because the old type of life insurance, it's really death
That,
insurance,
yeah.
because you're nothing happens until somebody dies, right?
Mhm.
Now with what you say, living benefits, a person can now access the death benefit while they're still alive. So let's say there's living benefits for chronic illness, critical illness, disability, and terminal illness. So, for example, somebody got disabled, maybe in an accident or serious illness, and there's what's called 6 daily living activities: uh, eating, transferring, continence, bathing. There's 6 of them. If the person cannot do 2 of those, they can now access the debt benefit, right? So living benefits, they're accessing while they're alive. Or for example, somebody had chronic illness, heart attack, stroke, cancer, right? Same thing. They can now access that benefit while they're still alive. Terminal illness. Somebody goes to the doctor and for a headache, right? And then the doctor did some tests, realized that, you know what, this person has a big tumor in the brain, 2 years to live, right? So now that person with terminal illness, at whether 1 year or 2 year, depending on the life insurance company, now can ask the insurance company, hey, I want to accelerate my death benefit, right?
Mhm.
So depending on life insurance, it could be 50% of your death benefit, it could be 80%, 90%, some even provides 100% of your death benefit.
Mhm.
Now you can truly call it life insurance. Life
Mhm.
insurance that you don't have to die to use. Now,
Mhm.
if you have cancer, would you rather die and leave the money to your family, or get the money now, whereas it's 80% or 90%, and use that money to maybe uh, go use for experimental treatment,
Mhm.
or maybe like buy go to a dream vacation with your family,
Mhm. Make
or
memories.
right? So make memories. So now it gives you more options.
Mhm.
So if that's why I tell people, hey, if you have a life insurance and you bought it maybe 5 years or older, more likely you don't have the new kind of life insurance, the real kind of life insurance with living benefits. So it's always good to have someone review your policy, and it's good to know what you have, right?
Absolutely. Absolutely. And today, at a time where education is so expensive, imagine having life insurance on your child. And I'm thinking if I had a child today, I would have a life insurance the minute the baby is born, right? The first opportunity I get. Now
Definitely.
that is going to grow as a education fund or a life fund for the child. I
Correct.
will put my child through community college for 2 years, help them get a job, right? And then have the employer pay for the rest of the university and masters, right? So that the child doesn't have financial aid, and then use that money partly for the child to buy a house and the rest to stay and use for other emergencies, because in life we're going to come in and out of careers. There's going to be, imagine COVID happened,
Correct. Definitely.
some
I
people
agree.
were able to take investments and draw from it, the others couldn't. What if we had the kind of insurance where we could draw a little bit from it instead of going bankrupt and losing our house?
Correct.
Talk to us about some of those type of avenues available to parents so that parents can actually not just raise their kids, but teach them the right way to financially think about life and make sure children are set up for success. Because when parents do that, children grow up understanding money. When parents don't do that, children grow up not understanding money and then making mistakes.
Correct. So when it comes, as you mentioned, opening up a policy for a child, right? There's a way, this is a way that you can really set up your kids financially throughout life, because this type of plan, let me step back a little bit, just because there's people, let's talk about a little basic when it comes to life insurance, because it would make sense when I go through some of this stuff. Okay, so really
Absolutely.
there's just 2 types of life insurance. It's term, meaning it ends, and then there's permanent. So term insurance could be like 10 years, 20 years, 30 years, right? But after the term ends, there's no more life insurance.
Mhm.
Okay. And then there's permanent insurance, means it covers you permanently for the rest of your life, as long as you continue paying or you pay a certain amount. Okay. So those type of life insurance, uh, there's normally cash value.
Mhm.
Okay, and so there's, and then also and then you add on to that fact that there's also living benefits. Okay, main differences of term and permanent is term tend to be cheaper, much
Mhm.
cheaper, because it ends, right?
Absolutely.
And permanent is more expensive, of course, because there's cash value, it's permanent. So term insurance, it's cheap because only 1% of the people that have term insurance gets to use it. By the
Mm.
time they need it, it's done.
Yeah.
Especially you have somebody that opens up a policy in 20 years old, after 30, they have a 30-year policy. By 50, they're still healthy. No more policy, right?
Yeah.
So all
Mhm.
those years that they put in, they got
Mhm.
nothing to show for it. You know,
Yeah,
that's why
and it's
there's other,
harder to get when you're 50, right? To get another term, it's going to be harder
correct.
because
So
you're older.
correct. So the thing is, when you talk about starting a life insurance when you're younger, what you're doing is you're locking in your what's called insurability,
Mhm.
because you're young, you're healthy, right?
Mhm.
Later on, the longer you wait, the more expensive. And then here's the question: will you still be healthy?
Mhm.
Will you still be able to qualify?
Mhm.
Right? So yeah, the two types: term tend to be cheaper, but it ends; permanent, long throughout the covers the rest of your life, more expensive with cash value. Okay,
Mhm.
so when we talk about college planning, you use those policies that are permanent because
Mhm.
there's cash value. You can build cash value. So the thing with those is, you start out with the children, it accumulates value. They can use the money in there throughout their life.
Mhm.
So for example, if I have a newborn, I start a policy, right? I start funding. Let's say I put $200 a month. Okay. By the time that my kid is 18 years old, they're getting ready to go to college, there's gonna be money in there that I can use for college,
Mhm.
right? And then you let that accumulate. Maybe uh, they're 25, they're done with college, they can take over the policy, they can take
Mhm.
over the premium, and they can build that up, right? And then maybe by the time they can use it for down payment on a car, down payment on a house, right? And then later on, continue building that up. Let's say they retire at 70, they're gonna have some money in there that they can use for retirement, that grows tax deferred, and you can access tax free.
Absolutely.
You
So
know,
you're
so
truly financially empowering a child for their entire life and showing them a blueprint on how to live debt free. I mean, that's the key, right? How do you
correct,
live debt free?
correct.
So
Um,
when you share these options with parents and adults,
okay.
what is the reaction? Because one of the things I hear is, and I saw this throughout my career, people say, I have insurance with my employer. People forget that your employer paid life insurance ends when your employment ends.
Correct. So, it's good that they have life insurance with the employer. That's good because most of all, it's cheap. And a
Mhm.
lot of times, even if you have condition, you get it qualified anyway. They accept pre-existing condition. But it's kind of the same thing like a company car. When you leave
Yeah.
the company, you don't take the car with you,
Uh-huh.
right? And the problem with that is, when you leave the company, again, you're going to be much older, right? Depending on how long you work for the company. And the question is, did your health change? Do
Mhm.
you now have pre-existing condition? Do you now have diabetes? Do you now have, right? So now it's going to be more expensive. And then again, you come back into that question: can you qualify?
Mhm.
Right? So can you repeat the question? I forget.
Oh no, I was saying, how do people think through this and structure a debt-free life?
So really, um if you're a good advisor, if you're good life insurance, it's not about you, right?
Mhm.
It's really about the customer. So you want to understand what their goal is when it comes to becoming debt free. Their goal is when it comes to saving money, and what kind of protection they need. And you collect all those information so you can understand where they're coming from, and then you provide solutions that make sense to them, that's
Mhm.
affordable to them, right? um and again, sometimes I just tell them, you know what, we got to talk about uncomfortable stuff, like
Absolutely.
dying, right? But it's a reality. You can't leave this to chance, right? So for example, if I'm talking to right now, I focus on mortgage protection and final expense. So I'm
Mhm.
sitting down with couples there, 65, 70 years old. I ask each of them, what happens if you pass away tomorrow? Will your wife be able to stay in this house? Right? Will she be able to afford this, to pay for this house by herself? Same thing if I'm talking to somebody who's 30-year old with two kids. Okay. Is your wife, does your wife, can your wife cover your income? So one
Mhm.
of the, you just got to make them realize, give them reality check, right?
Mhm.
And then it's just a matter of, uh, them realizing the cost versus the benefit, right? For what this is going to cost me, what am I going to get out of it? What, the return on my investment, like you were saying, treat life insurance as an investment. Okay. And then as long as they realize that it's really, you're just trying to help them out, that you're just
Mhm.
trying to give them options, so that way, you know they're protected, their family is protected, not just by if somebody passes away. It's the main reason really for buying a life insurance is to protect your income,
Absolutely.
right? So if the person dies, no more income, or if the person gets sick, how can, if let's say somebody suffers from a major heart attack or stroke, and that person cannot work,
Mhm.
how can the family, even though that person is still alive, how can the family survive
Mhm.
financially if that person is the main breadwinner? So as long as they realize that, if it's my job to make them realize that it makes sense, right,
Mhm.
based on what they need and what they can afford, they listen to you. Now when we start talking about, I don't know if we have time, some of the advanced usage of
Oh,
life
let's
insurance.
let's talk about the advanced uses, because I think people need to understand insurance is not an expense, insurance is an investment, right? And
Correct.
insurance is a quality of life issue anymore. It is not a post-death issue. So
Correct.
given those two important things, and with COVID and everybody's trying to figure out, how do I navigate this and how do I make sure my family is set up for success? Because we know how quickly the income potential can be taken away for no fault of ours. So let's go there. I think the time is right, and I think everybody wants to know.
Yeah, so you know if you have a life insurance with cash value, right? um that that money is liquid. You can
Mhm.
actually withdraw, or take distribution from that cash value,
Mhm.
and you don't necessarily have to pay it back, and you don't, depending on how you draw the money out, you can draw it tax free. So for
Absolutely.
example, you lost your job, you have bad credit, you can't get a loan from the bank, or you don't have any credit card, you can actually ask the insurance company and ask to borrow from or withdraw from that cash value. So
Mhm.
it gives you some flexibility. uh and talking about that, there's some, life insurance, cash value life insurance, if you're a business person, you can actually use that, you know as a collateral for loans, or as a
Yes.
capital,
Mhm. As
right?
an entrepreneur,
As an
absolutely.
entrepreneur, for example, like we all know Walt Disney,
Yes.
right? The happy world, Disney world. If he used some of his cash value from his life insurance to get Disney started.
Hmm.
Ray Kroc, we all know Ray Kroc, McDonald's,
Yes.
right? So yeah, same thing. For 7 or 8 years, when he started his first franchise, he didn't take income, but he used the policy cash value from two of his policies to, you know to pay workers and fund some of his expenses.
Mhm.
So it gives you that flexibility. And
Mhm.
also we can talk about uh with COVID, when the market crashed, right? A lot of
Mhm.
people lost money,
Mhm.
right? So there's a way to plan for your retirement where you can your principal is protected from loss, and you can participate in the gain, and the
Mhm.
money grows tax deferred, and you can
Mhm.
access the money tax free,
Absolutely.
right? When it comes to like saving money for retirement, um, people always get caught up with how much interest rate, how much return um, they get, which makes sense, right? So because when you're investing money or you're saving money away for retirement, there's three phases. First is the contribution phase, right? And then the second phase is the accumulation phase.
Mhm.
And then the third phase is the distribution. Now, people forgot about the distribution part because most plans out there like 401ks and IRAs, those are tax vehicles,
Mhm.
right? So let's say a person have $1 million in there. They forgot about the tax. They thought that whole money is theirs. But depending on your
Oh, Uncle
income,
Sam. Uncle
yeah,
Sam has a potion written up for them.
Uncle Sam will get his money no matter what, right? So now if you're drawing $100,000 income on your retirement plan, what tax bracket are you going to be? You're going to be in a higher tax bracket. Let's say you're at a 30% tax bracket. There's 30,000 gone from that 100,000,
Mhm.
right? And here's the thing: when you're in a vehicle that's taxable, you're partnering with Uncle Sam with your money.
Mhm.
Now, is that a good thing?
So Uncle Sam, for those of you who are not US based, is the federal taxes.
Oh yeah,
Okay.
yeah. The government
We
collecting
fondly,
taxes.
we fondly refer to the government taxes as Uncle Sam.
So here's the analogy. If you're a farmer, Dr. Cass, right? Would you rather pay tax on the seed money or the harvest money? Right? I would pay tax on the seed money while it's still small
Yes.
versus the harvest money where it's big. And here's what's happening, when you open up one of these plans that are tax deferred but taxable, Uncle Sam is telling you, hey, you know what? Don't pay tax on this money. Let it grow, okay? But when you need it, let's say at age 65 or at 70, when you draw the money, then I'll tell you how much tax you're gonna pay for it.
Yeah, because by then
That
everything changed.
is that a good deal? I mean, right now we're actually at the lower end. Our tax percentage is really pretty low compared to like during World War II and the Great Depression. And what's happening now with the US, do you seriously think the tax will stay the way it is, or is it gonna go up? It's definitely gonna go up, right? So I'd rather be on a vehicle that my money is I already pay tax on it, but it will grow tax deferred and I can access my money tax free.
So as I'm
Can I go
listening
ahead?
to you, Ben, I want to make sure folks, because we have an international audience here from all over the world, from Asia, from the Caribbean, Europe, and North America here, make sure you find the right person to guide you and advise you, because what is germane to your country and how the procedure works in your country may be very, very different from what we are talking about in the US. Our goal here is to educate you so that you can be an informed consumer and ask the questions, but then talk to multiple people who do help you invest in insurance and pick the right person for you after you've talked to multiple people. It's like getting married, okay? Don't marry the first person you meet. You get to know people, make sure
Date a
that
little.
it works. Yes, take a little time. Don't jump in.
Yeah, date a few. You know,
Yeah,
don't marry the first one. Well,
absolutely.
while we're on the topic, let me give some tips on how to buy life insurance. Basic life insurance, right? Because there's different reason when you're doing advanced uses of life insurance. So basic life insurance, if you don't have one, get one. Right? If you don't have one, get one. And when do you get it? Get it now, because the longer you wait, right? The older you are, the more it costs, and then your health may change. And if you happen to buy a permanent life insurance, now you're shortening the cash accumulation phase, right? The longer you have, the more time you have, the more money compounds, right? Let me give you an example when it comes to how money compounds, right? Do you know that a dollar, if you double it, so let's say you double a dollar every year, in 20 years the dollar will become over $1 million, right? You can do the math. One times double the two, double the four, right? So, but here's the thing, how taxes affects the accumulation of money when it comes to investment or saving money. That same $1 million, if you apply 17%, like mid-range tax percentage here in the US, just applying 17%, that $1 million, it's going to be like less than 178,000 for the same 20 years. So big difference, right? So if there's ways to avoid taxes, not pay, you want to pay taxes, otherwise you'll go to jail, right? But if you can avoid some of those taxes, it makes a big difference. Okay, let me go back to the reason. So get one, get it as soon as possible. Don't wait. And then also talk to somebody that's who's independent or non-captive. So I'm a non-captive agent, meaning I represent different life insurance company. Okay, so that way I can shop around for the person
So
instead
you
of
get
being
best option for the person you're helping, as opposed to selling the one thing that you're able to sell because you're a captive.
correct. So if I'm a captive agent, let's say I'm with Allstate or State Farm or Farmers, right? I can only sell the products that are available to me. But being an independent agent, I can shop around, right? Because one product may not be the best for everyone. Okay, so and again, buy something that we're talking about basic life insurance. Buy something that makes sense to you, that you can afford, that fit your budget. So those
Absolutely.
are, and
Thank you.
if,
Those are
oh, one
great
more,
tips.
one
Okay,
more.
go
If
ahead.
you already have a life insurance, right? If it's about 5 years old or older, review it with your agent. Know what you have, because maybe you don't have the living benefits. Maybe you need to adjust it. Maybe you need more coverage.
Absolutely. Absolutely. And if you only have your employer's insurance, take a serious look at, is that portable when you leave the employer? At what cost is it portable? And what happens if you're no longer in employment? Think through those. I would love to open this up for a conversation with the audience, Ben, because I am getting here messages also on Facebook.
Sure,
People
sure.
are following, people are getting very excited. This has been a very informational session for everybody. So I'm opening this up. Anybody here on live audience, any questions, feel free to jump in and ask. Shirley Ann, go ahead.
Hey, Dr. Cass, how are you?
Hello.
Good.
To your guest, and I was just listening. First off, I love the fact that you called it insurance, love insurance,
Life insurance, yes.
because it is about yourself, and it is about protections and what have you. Just have a couple of questions for you for clarity. On the what you call permanent, is that whole life
Okay,
insurance, or is that different?
so whole life is a variation of permanent insurance. It is a whole life is a permanent life insurance, and there's
Okay,
also,
yeah, because I'm sorry. Go ahead.
yeah, it is. So most
No, you go.
common permanent life insurance out there is whole life and index universal life. Both of them are permanent life insurance. Both of them have cash value. Whole life is a little more conservative because there's certain guarantee on that benefit, that guarantee on premium, guarantee on cash value. Okay.
Right.
Index universal life is more aggressive, less yeah, it's more aggressive, but you have a chance to have more cash value accumulation. So when I
Okay.
sit down with
Yeah.
somebody, I really sit down and see what their goal is. There's no, it's really their preference. Okay, would you rather
Yeah.
drive a sports car or SUV? You know, you want to get
I
there as
drive
soon as
both.
possible or be more comfortable. So there's no
Yes.
right or wrong. It depends on the preference.
Okay. So yeah, if you can put those types, because I actually do have whole life, and when you said permanent, I was like a little bit interesting. If you could put those types in the chat, I would really, really appreciate it. And then the other thing is when you would borrow, because that's what it is, money from the policies, are they not charging you interest on that money, even though it's your money?
They are charging you interest. Um, so you have an option to pay the interest or pay what you borrow, right? Or also you don't have to pay it. Then the interest will just accumulate within the policy, and then if something happens to you, they will just subtract that with your debt benefit, or when you start taking out money, they'll just take it out of your cash value.
Okay. Yeah. So at that point, then it's probably better to pay the interest because over a period of time, it would continue to accumulate.
Yeah, I mean, and also not necessarily, it depends on where you use the money, right? So what they're
Okay.
charging you, so let's say you have a whole life policy, they're paying you 4% interest on your money, right? Let's just
Okay.
say it could be different. And then let's say you borrow money and they're charging you 5%. And if you just look at it, hey, 4%, 5%,
You
I'm
wind up
losing here.
1%.
Yeah, I'm
Yeah.
losing here. But here's the difference. That 5% is a simple interest.
Got
Okay.
it.
Versus the, because when
4% is the compound interest.
yeah, and the 4% is compound interest. So when you're borrowing money, you're not really taking the money out of your cash value. The life insurance is lending you their money.
Thanks.
So your money at
Actually
4% is
borrowing
still
from
working for
yourself.
you, and it's earning compounding interest.
Oh, yeah, I just need to go. Yeah, no, I'm sorry. I'm kind of multitasking here. Forgive me. Trying to get to an appointment, but I really wanted to support Coach and this show.
Okay.
And I'm really glad that I tuned in. The information you shared was very clear and it was understandable. And thank you for sharing it.
Thank you. Yeah.
Thank
Yeah.
you,
If you have any
Julia.
question, I'm pretty sure Dr. Cass will provide my information. You can,
Yeah.
Yeah.
are
What
you in
state
the
are you
US, by the
located
way?
in?
Yeah, she's in the US
Okay.
and Julianne, I've tagged Ben on the Facebook message so you can directly reach out to him.
Oh, fantastic. What state are you in?
I'm Illinois, but I have like 7 other licenses from
Oh,
other
you sound
states,
like me.
and I'm adding more.
Yeah, you sound like me with the real estate, right? I love it. All right. Thank you. Thanks again, Dr. Cass.
You're
Oh,
welcome.
thank you, Julianne. Have a lovely day.
Yes.
Anybody else here? Any questions? Anything that comes to your mind as you're thinking through this?
They will have questions on our next show, Dr. Cass.
Yes. No, so we have Melinda who's joining us from Sri Lanka. He's a young
Okay.
gentleman who just finished high school.
Okay.
Okay. And he's looking for internships and job opportunities, and he's thinking about how to make money and how to invest money. And his question is, what is self-insurance? So you want to talk about that?
So self-insurance is really, saving your own money, so you don't have to pay an insurance company for the cost of the life insurance. I do talk to people that they believe in that. I don't personally, but that doesn't mean, it's your preference. But just let me give you an example why, to me, I'd rather have a life insurance. So for example, if I'm saving, if I'm paying for a life insurance policy for $200 a month, right? And I have a $200,000 policy. So that costs me $2,400 a year, right? So let's say I pay that in 5 years, right? So 2,400, whatever, or let's just say 10 years. That's 24,000, right? So But let's say something happens to me in the first year, right? I only paid 2,400, but I have a $200,000 policy. Now I have access to $200,000 a pool of money versus just the 2,400. So you're leveraging your money. That's how I see it, right?
Yes.
Because I can take that $2,400 and let's say put it in the stock market, and let's say I double my money, right? So that becomes 4,800 after 1 year. But I got sick. I can't work. I only have access to 4,800 worth of money versus if I have a $200,000 life insurance policy with living benefits, right?
Mhm,
I can access up to 80-90% of that 200,000 versus the 4,800.
mhm.
So it
And
just
that's
gives you more option and leverage.
And that's a good explanation. The other thing I see is if anything happens to me, I am not going to be in a position to go to the bank, make those decisions and do those things. Somebody else has to do it for me. And if I had an insurance policy, the insurance company becomes my partner, right? So my agent becomes my fiduciary. There are lots of different things that can fall into place if I am not able to. And if anything happens to me, my family has another person to lean on to support them through, right? So I'm always a believer that having an investment person, an insurance person, and an attorney, three things are important to us because it's
Correct.
not just about us, about the family. And I'm very careful in choosing because I need to make sure that that person I'm choosing as our service provider, our strategic partner, it's somebody who values and respects my family, and my family is comfortable working with them. I talk about love insurance, right? So these are all services that the family needs, and it has to be provided with love and care. And can this person be that person for my family if I'm incapacitated? Whether I'm a male or a female is irrelevant. So that's why choosing the right person is so important. What are the three things you'll ask people to look for when they find the right partner, be it insurance or any other of these services?
Oh, you're asking me.
Yes.
Okay.
Uh-huh.
So like I said, find somebody who's independent because then they can shop around for you. Okay. And then go to somebody you know, or if you don't know anybody, ask somebody you know who knows somebody, because they're not
Mhm.
going to refer that person to you anyway if they didn't have a good experience, right? And then what else? Make the decision about you, not about them, right? Also, if the person, make sure that that person is not about just to there to make a sale on you, but really taking the information, listening to your concerns, and showing you options that make sense to you,
Mhm.
right? Those what I would say.
Great tips, Ben. One last question from the audience here. How do you tie together life and critical illness? Talk
How
briefly about that to give folks a little bit of insight.
how do I tie them together? They're
Yeah.
they're really separate. Uh, it's just different benefit. Okay, so if you have a life insurance with life insurance provides basic, right? It provides that benefit. But when you have life insurance with living benefits, with critical illness, chronic illness, a terminal illness, now you have an option to accelerate your death benefit to
Mhm.
use it for critical illness, chronic illness, and terminal illness. So they're
Mhm.
just different benefits, and they can go together. I hope
So
that answered the question.
yeah, and so thank you, Ben. And think of it as a instrument with multiple purposes, right?
Correct.
So so when you buy a car, you get the basic version and then you can get all the options, and then you can have the EX version, which has all the bells and whistles, right? So the more options you have, a little more costly it's going to be, but it also gives you more protection. So if we're living in Chicago, I want to make sure I have anti-lock brakes and I have an all-wheel drive because I'm going to have to drive in bad winter weather,
Correct.
right? Buying
That's
a
a good
race.
analogy, by the way. Awesome.
Thank you. So I want to make sure that it's not just a vehicle to go from point A to point B to serve a purpose, but it is also protecting me under all circumstances, all seasons. I'm going to drive through, right? Same way, whatever I'm buying, is it going to serve through all seasons of my life? Remember the advice,
Correct.
the nugget we shared up front? Look at all the seasons we are all going to go through. That's life, right? And so how do we navigate this? How do I give myself the best shot? And how do I make the right choices? Whether it happens or not, I want to be prepared for it. Kind of like carrying an umbrella, whether it rains or not, because, you know, I don't want my makeup running all over my face by the time I get to my client's office.
Correct. It's like having a small umbrella or big umbrella,
Yeah,
right? So
absolutely. Absolutely. Okay, Shirley, and one quick question. We have 1 minute before we close out, so go ahead. I see your hand is
Okay, so
up.
that one question is, I'm not certain if I heard Ben mention or not. I do know that it's showing up popular in the real estate arena, encouraging people to get life insurance policies where it will pay their homes off if something happens to them, and their family member will wind up having the home actually paid for because they use that policy for that purpose. I'm done.
Okay.
correct,
Normally,
correct.
mortgage
Yeah.
companies ask you to have a life insurance so that they know that there are options for the mortgage provider. Go ahead, Ben.
Yeah, so that's one of the thing I focus now is mortgage protection. So we will provide coverage for the loan amount. So if something happens to the person, the insurance company will pay off the loan amount. Or if because it depends really on the cost, right? So if they want something a little cheaper, we will cover the payment, the mortgage payment for 1 year, 2 years, 3 years, right? Same thing. Something happens to the person, that mortgage payment is covered for depending how many years. Okay. And then there's also options that my clients love is the cashback option, right? Because a lot of the mortgage protection policies, those are term policies. So that way it's cheaper. So let's say you have a 30-year mortgage, then you open up a 25-year or 30-year term policy. But now after the term ends, you pay off your house, nothing happens to you. What happened to those payments, right? No, so
Gone.
for nothing, for a little more, you can buy term insurance with return of premium or cashback option. So let's say you have a 25-year policy, you pay off your house, nothing happened to you, you get all your premiums back. To me, that if
Beautiful.
you can afford it, that's a better choice.
Absolutely.
Absolutely.
I love it. I love it. Thank you.
Absolutely.
You're welcome.
Thank you so much for these insightful questions. I know you want to make this impactful for you, for your life decisions. So I am so happy to see the level of engagement. And Ben, thank you so much for coming here, spending an hour and truly educating our audience, both in the live feed as well as our Facebook Live interaction audience, making sure that people are going to learn something and they can make better choices. And as we publish this on YouTube and we're going to have asynchronous viewers, everybody is going to get some wisdom in terms of how to better plan their financial future and how to make sure that they show up and show their love for their loved ones in a meaningful, tangible way and not leave debt, right? What's the point in having a family you love and then once you're gone, everybody's mad at you because you left all this debt for them? that would be the polar opposite of love. So thank you so much, Ben. It has been an honor.
It's my pleasure.
Thank you so much, and look forward to bringing you back and continuing this conversation.
Definitely. Thank you.
And to our audience, as we bring another wonderful conversation to a close, feel free to email me at cass@casshenry.com with any questions, any suggestions for future topics. And do go to YouTube and look at Transform with Dr. Cass to catch our episodes of past and future. And you can definitely catch this as an ongoing resource on our YouTube channel. And thank you so much for being a part of our Goldilocks community. Thank you for being a part of transforming our community through knowledge sharing and education. And as you go through the week ahead, take this information and start using it wisely so that you can shape your life and you can unleash your inner Goldilocks. And as you go through life and transform others and transform your purpose, please make it a point to transform yourselves and start loving yourself and making choices in a meaningful way to show that love.